All right, well, it is the top of the hour, so good afternoon, everyone. Welcome to our virtual home buying seminar. We're very happy you could attend and join us. We have a great topic today and a couple of mortgage and title experts to help us through this process. So I will start right now. If you want to forward the screen, thank you very much. Again, my name is Brian McCown. I'm the AVP of Mortgage Operations here at Michigan First Mortgage. We're a division of Michigan First Credit Union. And as I mentioned, we've got a couple of great speakers, Autumn Knoll and Matt Delecki, which will get introduced here in just a second. If you're joining us, there's a lot of things that go into and a lot of topics that we cover in the home buyer seminar, a lot of things that go into a mortgage. And really what we want to do is make sure that you are prepared on every aspect. So again, we appreciate you joining the call. Today, we're going to focus on closing costs and what to expect. We'll go over a few tips and tricks to get through the process, and we'll walk through those in a little bit, and then we'll have our two experts give us some closing remarks. As always, if you have questions, the chat box is open. That's being monitored the entire time, so please use that. We appreciate a little interaction, and if there's any questions, fire away. We'll be more than happy to answer those. So I am going to start right now and turn over to Autumn Knoll, who is a loan officer here at Michigan First Mortgage, to give a little introduction of herself. Autumn?
Hello, everyone. Like you said, my name is Autumn. I've been in the industry for over 18 years. I'm very passionate about, what I do, being part of the first-time home buying process or upgrading of a home, just really being a part of that experience and being able to help and influence in the best way that I can really is what everything I do is about.
Great, thank you very much, Autumn. And I'd like to then introduce Matt Delecki. He is the Chief Financial Officer of Sislo Title Company. Matt, good afternoon.
Good morning, everybody. This is Matt Delecki, and I've been with Sislo Title for, believe it or not, 33 years when we started our company. I have currently been in the title business for 41 years, and I'm looking forward to being able to answer your questions today. Thank you very much.
Great. Thank you very much, Matt and Autumn. Great to have you here. So we're going to jump right in and kick things off. There's a lot. It may seem like a smaller topic, closing costs and what to expect, but there's a lot that goes into this. So Autumn, I'm going to start the first question with you. We talked about closing costs. It's the name of our webinar here, but what are those? What exactly, if you could tell our audience, what are closing costs?
Well, closing costs are the costs and the fees that go into a purchase or refinance of a home. There's a lot of misunderstanding with that sometimes because often people think that the lender is the sole person that is that these costs are going to or the recipient of the cost. In actuality, there's the title company, the appraiser, the county and if you put less than 20% down on a home, then you have to do an escrow. Escrow is a savings account where you place the taxes and insurance. And so those go into it as well. So then there's of course, the lender loan origination fee. That's a part of the cost.
No, thank you. And, you bring up a couple important points. There is a lot of different participants involved in doing a mortgage, not just the lender and the buyer and the seller. We have a lot of vendor partners to handle quite a bit. You mentioned appraisal, but one of the other things, obviously, we mentioned title, and I'd love to kick this over to Matt to talk a little bit about what are some of the title costs that are related to doing a mortgage and maybe a little insight on what those costs represent as well. Matt, I think we've still got you on mute.
We're good?
Now we're good.
Okay. Generally, there's two title insurance costs associated with the closing. The first one is a owner's policy, and then the second one is generally what's called a lender's policy or a loan policy. Those closing costs are generally negotiated on the purchase agreement and can be paid by the buyer or seller. Basically, what the title insurance is doing is ensuring that the buyer has free and clear title to the property, and also that the lender also has a policy that insures them as well.
So as it pertains to the different, you mentioned lender policy, you mentioned owner's policy. So I know we do get questions, Autumn, I'm sure you get those as well, as far as what exactly title insurance protects. You talked about, we want to make sure we go through a title company to make sure that we have clear title. So when you buy a home, you actually have all rights and ownership associated with that. So could you just get, because those are some questions, can you get a little more in depth on what the lender's policy versus the owner policy does and protects?
Sure. The owner's policy is generally paid by the seller of the property. And mainly the guarantee is that the seller is deeding over to the property to the buyer, and that the buyer has free and clear title to that property, meaning there's no unpaid property taxes, that any mortgages that the seller currently has on the property has been paid off as well. The lender's policy or the loan policy is the policy that is generally paid by the buyer to supply a title policy to the mortgage company or lender, that in essence, basically what it's saying is, hey, I'm getting a mortgage on this property, and if I fail to make my payments, the lender is generally the first one in line to get their money back. So that's generally the two differences. The owner's policy insures the buyer, and the lender's policy is actually insuring the lender that is paid by the buyer.
Right, and that's, these are good protections to have, obviously, on a home. And when someone buys a home, or if anyone on the call's in buying the home for the very first time, it's really, these policies are there to ensure that again, you keep clear title. There's no other claims that can come back on you, and you've got the insurance that should someone try and do that, you're protected, your family's protected to remain in the home. So Matt, thank you. That great explanation there. Autumn, we talked through a variety of closing costs in your, when you first spoke. How much are they? Because that's going to be probably one of the top of mind questions that people have out there. Okay, I hear about costs, but what are we talking about? What dollar amounts will impact?
Yes, that's a very good question and a very common question. So it's between 2 to 6% of the purchase price. It also depends on the property type and the loan type as well. Like, for example, if someone have a VA loan, that's a loan for veterans, there's additional inspection required, like pest inspection, or if the property is a condo, there's additional fee, like a condo questionnaire. Maybe additional fee. So there's a lot of influences to why it's between the 2 and the 6%. But you can, if you stay within that range, you can always be confident that you have an understanding of what you will have to bring to the table.
And again, it seems like a very big range, 2 to 6%. But like you said, it depends on a lot of factors. You had mentioned escrows a little earlier. Can you just touch on a little bit, because that can be a decent percentage, somewhere in that 2 to 6%, if you have to hold escrows. So can you just explain a little bit more on what those are?
Yes, absolutely. So when you buy a home and you put less than 20% down, you have to put money into the escrow. And escrow, as I mentioned, is a savings account where we hold the taxes and insurance. And so what we normally do, and then how much you have to bring also depends on the time of the year, the month that you, and the time within the month that you close on your mortgage would determine how much you'll actually need. Just for me, in good practice, I go out 14 months when I'm giving an estimation of how much they would need. When I say 14 months, I'm saying 14 months of insurance and closing costs. I'm sorry, insurance and taxes. I go about, around that range to cover if they have to pay the seller back for taxes that they've already paid. So even if there's an adjustment, in most cases, to be honest with you, I overestimate because I rather for them to get a reduction in their costs than be suddenly surprised with a larger amount that they have to now come up with at closing. So.
Yeah, and that last thing, just touching that that's an important point, that we really, at the beginning of the process, we work our hardest as a lender to make sure that we have an accurate representation and an estimate of the costs. At the end, we'll know to the penny what all of the costs are. And the escrow account is, it is it's a service that's provided that we can make sure that every month a little bit of that payment goes towards your taxes, your insurance, when they become due. Autumn, as you mentioned, right now is tax time in Michigan. Summer taxes are due, and sometimes the bills aren't out yet. So does that create a little bit of a not a guessing game, but can that raise the cost? You talk about time of the year. How would that work with closing a loan right now, buying a home right now when taxes are due?
As I mentioned, if the seller has already paid for the taxes, you have to reimburse them. So you would have to bring more. That can increase how much you bring to closing. And it's really important to know, okay, this is the time of the year where the money is due, so that you can prepare yourself for how much or what you may need to bring.
Okay. No, thank you.
Mm-hmm.
So those are some of the closing costs we have. Matt, I'm going to turn it back to you very quickly. All of the fees and the costs that are on a loan are broken out. So we actually provide documentation. We call it the closing disclosure. Can you get into a little bit of just what that closing disclosure is that goes out to a borrower, a buyer and a seller, and how that's used and what it represents?
Sure, Brian, thanks. Basically, the closing disclosure is a 5-page document that basically lists all the closing costs associated with the actual closing itself. And this is the government changed this law a while back that they wanted to give the buyer more opportunity to see the closing documents in that. So they created a disclosure, and basically it said within 3 days, prior to the closing disclosure will be provided, and all the closing information would be on that document. And that would be relating to your appraisal, credit reports, title insurance, closing fees, and that. So the buyer, 3 days before the closing, in essence, has all the necessary information and the closing fees to know what his check would be that he would have to bring in for the closing.
All right. No, I appreciate that. Autumn, as it relates to the closing disclosure, obviously Matt mentioned the 3 days prior to, what, from a loan officer standpoint, working with the borrower, can you talk a little bit about that experience? Sometimes maybe what some of the common questions borrowers might have related to costs, or from the lending standpoint, working with the borrower, why it's important to get it out in advance of the closing?
When they get it in advance, it gives them the confidence that, okay, they could be prepared, they can ask the question. It's a better experience for them. And then it gives me opportunity to explain to them what's on that document, because if you don't look at it every day, it could be overwhelming. And so, because you're seeing all the people that are involved, on that document, you're seeing all the people that's involved in the transaction, and right down to the lender, because oftentimes people think that we have more control over the cost than what we really do in reality. When you usually on the second page, section A is the only control that the lender has, because that's when we're talking about, if anyone purchased points. Buying points sometimes is an option that someone would select if they're looking for a lower rate. That's where you'll find lender credits. That's where you will find things that we can actually, as a lender, influence and can either increase or decrease your closing costs. So having a good understanding of that document before you close make you more confident and secure in what you're doing and understanding the process.
No, very good. And it is obviously, it's a very important document. It does have a companion document at the front of the process called the loan estimate. And that's where we talked previously about, we try and give a good estimate of all the fees, of what the fees would be based on, you know, the beginning part of the process and the knowledge that we have. Things can change over time. As we've gone through, you know, we've mentioned a little bit about different costs. And I'm going to stay with you for a second. Who pays closing costs?
Can you say that again?
I was going to say, you know, the question, because there's a lot of costs, and Matt talked about a lender's policy or an owner's policy. But as you go through all of the list, who actually pays closing costs?
Oh, okay. Yeah, you know, it's everyone knows that the buyer has to pay, but the seller actually pays a portion as well. Obviously, the buyer pays most of the cost, but you can always negotiate with the seller and see if they'll be willing to pay more of the cost, depending on the type of loan you have would determine how much more they can give. For example, if it's a VA loan, they can give an additional up to 4%, FHA up to 6%. Then conventional, it gets a little, it's more nuanced. So it depends how much you put down, the type of property, but it can range, I want to say 3 to 9%, depending on the situation.
And when you throw out those percentages, it's a percentage of
the purchase price.
The purchase price. Okay. So yeah, you know, when you talk about you can work with the seller, how would a borrower go about working with the seller? Is that through you? Is it through the real estate agent?
It would be through their realtor. They want to have the conversation with the realtor, you know, and express they're looking to lower their closing costs, and that's one of the most common options.
Okay. And then Matt, I know you touched on this a little bit, going back to title insurance for a second. You talked about who is responsible for paying. It's not always, it is not always black and white. Is that correct?
Yeah, that's correct, Brian. So basically, I think everybody has to keep in mind that everything is technically negotiable. There's nothing set in a standard Michigan closing that indicates the buyer pays this, the seller pays this. Everything is negotiable. Generally, though, the buyer is going to pay closing costs associated with his mortgage for the most part, and the seller is going to basically pay the fees associated with his closing part. And that typically, for example, real estate commission, which is generally 6% to 7%, is paid by the seller. And also property taxes that are currently owing on the property, because the seller has to make sure that the taxes are current to provide clear title to the buyer, are generally paid up to the closing date, are paid by the seller. But also once in a while too, is you will get the seller offering some sort of concessions. And that's basically kind of what Autumn mentioned as well, is the seller wants to help. He wants to get this buyer in the house, and he might know the buyer needs a little extra money. So what he might do is offer some closing costs concessions that says, I'm going to pay $3,000 of the closing costs associated with the buyer. And the whole purpose of that is helping the buyer get into the mortgage itself and buying the home.
Right. No, that's yeah, that's good to know. I think what you both just said there, you know, everything is up for negotiation. A loan program might have some limitations, but you know, as Autumn said, it could be up to, you know, 3 to 9% could come from the seller to help pay for the closing costs. What if someone wanted to? Can they finance the closing costs? Can they roll those into the mortgage amount that they bought them? Autumn, I'll kick that one over to you.
Well, it depends on the loan type. If you are interested in like a purchasing a home in a rural development, and honestly, rural is a lot closer than what you think. Oftentimes they think it's at the tip of the mitten, and it's not that far. It's a lot closer to these to the metropolitan area than what you can imagine. You just visit their website to find out, or just call your mortgage loan officer to find out. They can look into that for you. But anyway, the USDA do allow you to wrap your closing cost in there up as long as the appraised value of the home is greater than the purchase price, and you can roll it up to 102% of the loan to value.
And no, and that's good to know. And USDA, for the folks on the call, it is the U.S. Department of Agriculture. It is the same people that certify our beef, also offer rural housing home loans, and a diverse offering from part of our government. So, but as far as wrapping in, you had mentioned earlier one of the fees was points, and
Yes.
how could points be used in relate to your closing costs?
That's right. So you can, if you're willing to just pay a little bit more interest, you can actually, the lender actually can absorb a good amount of those closing costs for you through lender credits. Is how you will go about doing that.
And how would and just very briefly, how does a lender credit? Because that has been out in the news. People have talked about that. How does a lender credit work?
So like as I mentioned, you're ultimately the lender is ultimately paying your closing costs. I believe that's the simplest way I can put it. And because the lender is paying your closing costs, your interest rate will go up a little bit, but you want to have the conversation to make sure that it doesn't impact your debt to income ratio, because loans have limits. For example, conventional loan, you can only go up to 45% debt to income. When I say that, that's how much money you earn versus how much you have to pay in expenses. So as long as it's not impacting your debt to income ratio, and this puts you in a position where you have to bring less, where you can bring less to closing because the lender is willing to absorb the cost for you. If it makes sense and if you're comfortable with the interest rate and the payment, it might be the best option for you.
So that is a good way to, that kind of ties into one of the other questions. I was going to ask, okay, so closing costs are 2 to 6%. How do we get those lower? It seems like this may be one of the solutions to get your closing costs lowered, is to explore maybe paying a little higher in rate, but you have to bring less money out of pocket. So it might make sense in a situation to use that option to get into homes. Is that correct?
Yes, to get the closing costs lower, that is definitely an option. But there's also other options as well. Shopping insurance can help. The seller concessions, as I mentioned, can also help. Down payment assistance can help. We have a relationship with MISTA where MISTA can give you access to at least $10,000 that can go towards the closing cost. We also are the only credit union that is participating in the Detroit down payment assistance, where if you are a resident of the city of Detroit and if you've been there for the last 12 months, you could potentially get $25,000 towards your closing costs. So this is definitely a great, awesome way to lower those closing costs for you. So there's multiple options out there. You can also shop lenders, but keep in mind on the loan estimate sheet, the second page in section A, that's the only area that when you're shopping rates that the lender has control over. Be cautious because sometimes other lenders will omit or don't offer full disclosure where the closing costs can seem lower than the other. And that's why it's very important to work with a lender and a mortgage loan officer that you trust that is giving you full disclosure.
We've heard in the past that some of the fees, maybe going back a decade or so, but there have been issues with closing costs where maybe some of the fees are bumped up. They're added a little margin on top of that, on an actual fee. Is that allowed today?
Oh, absolutely not. Absolutely not. There is protection. We're a lot of us, or if you're not familiar, in 2008 with the market crash, a lot of mortgage loan officers were out there, or and not just officers, but maybe mortgage brokers or so forth. They were using those type of methods to earn extra money and do things that were illegal and more or gray, where now there's defined laws and protection that protect you from those type of methods.
Yeah, we're going to go to the wrap up here. We're almost out of time, but I think that's an important point we definitely wanted to address and sort of assure is that, take for example the cost of an appraisal. If it costs X, he's a lender or a title company, there's no added fee to that. Whatever the cost of that service is, that's what is being paid for. There's not, a little extra added on anywhere in the cost. So we are at 12:25, and I know we've got some wrap up things to do, and we definitely wanted to give our audience some takeaways. So put a couple things up on the screen. Autumn, I'm going to go to you, and can you talk about 3 good takeaways for our audience from the mortgage side?
Yes, one of the a great takeaway would be to get a pre-approval, because before you even get to the closing cost, before you even get to the purchase agreement that'll lead you all there, you have to first be pre-approved, so that they can place an offer and the offer can be accepted. And then that way you know exactly what you can afford. The seller knows that you're serious, and if you find something you like, you can act on it immediately. You also want to understand your options to pay for closing costs. As I mentioned, MSHDA down payment assistance, and there's a Detroit down payment assistance. You know that you can use lender credit now. You can buy points to get lower interest rates. So you just want to really consider everything that you have access to as a home buyer to get you into the place that you want. And then lastly, you want to follow the lead of your loan officer. Like towards the very end, we talked about all the deception that's out there. You want to make sure that the person that you're working with is fully explaining everything, and that you have a clear understanding and there's full disclosure, so that you can trust what they say and just follow their lead.
Great, I appreciate it. Great points, great takeaways. Matt, I'm going to turn to you. What are some things to take away from the title side?
Well, I think it's very important to know what the title company's role is in the transaction. And
Matt, I think we're breaking up just a little bit. I wonder if we go off video, if that will help with the Zoom.
I can't understand nothing he's saying.
Yeah, we're trying to work through. I apologize, everyone. I just sent a message here to Matt. I think the video sometimes slows Zoom down. Matt, if you do come off video, that might help. We still got some latency there. No, not able to hear. Well, very quickly, let me do a quick recap and talk with Matt. His point, reminding what role a title company plays in the process. They are the experts that make sure that you have good title, good ownership to the home when you purchase it, and then they do provide the protection to both the lender in case of a lack of payment or a default or other claims against the property for a mortgage position, but it also protects you as the homeowner, that you have clear title, and any claims that some other party would try and make, that you are protected and you can remain in the home that you purchase. The last couple items of the closing disclosure, we talked about it a lot, but it really is the document that details out line by line all of the closing costs there. And kind of to Autumn's point, follow the lead of your loan officer. This is an opportunity for you to use that document and really make sure you understand any questions at all you have. We, in the mortgage process and good reputable lenders like Michigan First, we want to make sure all of your questions are answered before you sign on the dotted line, and you understand the costs into the loan, down to every little cost, and what it takes to get into the home, so that when you purchase the home and you start making your mortgage payments, you're comfortable and secure with that. So I want to thank everybody. We've got a couple just very quick wrap-ups. So how to reach us? One, from the mortgage standpoint, you can go to info@michiganfirstmortgage.com. You can go to our website at michiganfirst.com/mortgage and talk with any of our loan officers there. We have an 800 number that's up on the screen if you'd like to reach that. My recommendation on this call, of course, is to reach out to Autumn, our resident expert that is with us today. You see her phone number and her email there. So any questions at all, please reach out. And then from the title side with Matt, again, he's the CFO at Sislo Title. Go to their website. They have ways to contact if you have any title questions. If you're in process with a loan, again, remember, you always have a team. You've got your loan officer, you've got your realtor partner, and of course, our title experts help us with that. Thank you all for coming and attending this presentation. I hope you've learned a lot about this session. The recording.
So
I'm just gonna go through that. So I thought was there a okay. You can view this presentation on michiganfirst.com/mortgage-seminars. This and any previous versions will be available. So if you do have any questions, visit there. Or again, reach out to our great experts that were on the call. Thank you everyone for joining. Have a great day. I hope you all the best luck in your home buying process. Thank you.
Thank you.